So awesome. Okay, here we go. Boom. We are finally live, ladies and gentlemen. Technical difficulties sometimes. It feels like there's little digital internet fairies just running around and plugging or unplugging things. I get like 40 or 50 megabits per second up and down. And for down, that's pretty freaking fast. And for some reason, the stream was only giving me like 6 megabits per second while connecting to YouTube, and sometimes as low as 1. And I turned everything off. I restarted it, didn't work, and then I just all of a sudden started working again. Anyway, so welcome to the show. Thanks for joining us today and being patient for the us to eventually get there. That's always funny. We got just a pretty easy morning session here to go over. There's some things I'd bookmarked in Twitter that I want to go over. A bunch of you kept asking how my XRP tweet went and why I'm not over 100,000 subscribers since then. And we're actually going to start here today. This is a nice little thing we had found. This is from Summer's Things, a share that he had dropped on March 20th. I bookmarked it a little while ago. So Coinbase Derivatives LLC quietly filed certifications with the CFTC to list U.S. regulated futures for Dogecoin, Litecoin, and Bitcoin Cash. Now, there's a lot of talk around future ETFs for Ethereum. And I think one of the interesting parts that kind of came out of this was Bitcoin was at first considered a commodity. Now, Bitcoin Cash, Litecoin, and Ethereum, and I think they said, Dogecoin futures contract here as well. Those are already on the CFTC board. That's really fascinating to me. The idea that to some degree, the commodities we'll just use the truncated version. The CFTC is already considering Dogecoin a commodity instead of a security, and Litecoin and Ethereum, all of them are kind of already on the books for the CFTC as commodities. I think that's important because right now there's this big conversation going around on whether Ethereum is a security or not. We saw some news come out around that most institutional investors were only really interested in Bitcoin. And that makes a lot of sense. Bitcoin creates a great store of value for a treasury, for a company. It's not really seen as an investment, potentially so it is, so far as just sitting on the regular cash that your company would sit on to keep operations going over the next 10 years, which is often how business will look at things. So the fact that already, if the CFTC is considering these ideas commodities, what's the likely event that we see a basket or an index of cryptocurrencies that you can buy into as well? A lot of the times the altcoin and the Bitcoin market kind of have pivots from each other. Now the altcoin market is full of things that go to zero and actually mostly perform poorly against Bitcoin, which is why you have so many Bitcoin maximalists. You're saying, well, I should have just only invested in Amazon. Although Bitcoin can be much bigger than Amazon, you'd be like, why would you ever want to invest in Google? That's so stupid. Google sucks. I think in general, when you're looking at an investing thesis versus a treasury thesis, you're talking about storing value. Now, again, the interesting part here is that the store value is really maintaining such astronomical growth over top of assets, because assets have a relationship that's, again, still mostly based on dollar to dollar sales side volume pressure, right? Like, are people buying products and goods using the dollar? So what this kind of brought me to thinking was, now the CFTC, or at least for a while now, the CFTC has considered a lot of these commodities. Massively increases the chances of whatever fear there is around Ethereum getting its futures is kind of taken off the table. I think Ethereum will get its ETF. I think very shortly after that, you'll probably see an approval of an index of ETFs that go along there. Might even include something as crazy as Dogecoin. I've made sentiments around money being kind of mimetic anyways. And one of the fun parts about a decentralized money is that you get to make your own choices. So if you want to use Dogecoin and someone wants to accept Dogecoin, there's no reason why that shouldn't be possible. at least from the way I understand money. Peer-to-peer cash or money just meant two peers decided that they wanted to use it. So if two peers decide they want to use Dogecoin, why would we want to argue against that? That sounds great. Cool. You do, Dogecoin fams. I think that's quite all right. So this is a really nice future telling piece, I guess, coming from the futures or the Commodity Futures Trading Commission. I think we're going to see the approval of the Ethereum ETF in probably around, I think, the August one sounds the most sensible. This other piece I wanted to look at, centralbanking.com, somewhere we don't normally visit, but hey, why not today? Switch to the gold standard could stabilize prices. Philadelphia Fed research says a long-run price stability could be a key feature of the gold standard. Now, we all clearly here think Bitcoin is going to become the standard of the future because it'll be the easiest to trust amongst the group of dictators that are currently trying to take over the world. Because if you can't trust each other, you can probably trust Bitcoin. So I think this is kind of a funny little article you sound. The central bank sounding the alarm on ways to stabilize prices using gold. Knowing that the digital gold of the future is likely Bitcoin, is this article supposed to just say switch to Bitcoin standard could stabilize prices? Philadelphia Fed research says. I think that's what these articles will read like, somewhere around 2035, with Bitcoin's price being in the millions of dollars. So just a fun little off-topic rant there I wanted to cover. I'm just going to scroll into the stream to make sure everything is going well still. Oh, and it is. And Jonathan Butrell drops a super chat. I haven't seen one of those in a while, but I guess we also don't do as many live streams as we used to. He says, I'm going to be in Nosara for the 8th through the 14th. We should grab a beer. Our friends, it says, we are buying property here and would love to talk for a bit. Well, Jonathan Butrell, that sounds great. I've got some friends that are up in Nosara. We were pondering flying up there for a visit this weekend. Maybe it's a little bit far away from where I live. It's like a 6-hour drive, but we can find some kind of private smaller planes that do fly out there as well. So yeah, here, tell you what, you can email me at info@arcanebear.com and I'll send you a message and see if we can connect. Thanks for the super chat there, Mr. Jonathan. Okay, so I want to go to the next pieces that I was taking a look at here. Scroll back. Oh yeah, this one. So a little bit of data from CoinGlass today. The liquidation heat map. I thought this was kind of fun. Majority of liquidations, which exchanges they came from, and then under which assets there were. So there was a liquidation of, wow, actually, that's not a whole lot. You'd think it would be a hell of a lot more than that. We had some nice wicks up from 71 all the way down to 69,000 today. Let's see here. Where was it? Yeah, it's saying only $2.39 million in liquidation on, that's the 1 hour. There we go. Thank you. Awesome. Okay, so that's a bit more sensible. $66 million in liquidations. Yeah, I was like 1 hour, $2 million. Like something's wrong here. That's not high enough. Should be much higher. Over the last 24 hours, $66 million in liquidations. 42 million of those long, 23 of them short. So again, most liquidations coming from the long side at the moment, which makes sense during a bull market. Less people short, although still covering interest. On Ethereum at 24 million on the long side liquidation and 13 million on the short side liquidation. Not a huge difference on liquidations between the two, considering. I wonder if there's a data gap here that I'm just not getting. Open interest on the exchanges as well. Let's go with larger data. Still 120,000 Bitcoin in open interest. Nice. Only a 2.69% change. Cool. So not a huge amount of liquidations. I thought it was going to be higher than that. I thought we'd be closer to the few $100 million with those big wicks. The next thing I kind of wanted to share and take a look at was just our general trading ranges. For those of you that might be new here, we are consistently following the Wyckoff trading ranges. They provide a great amount of info and detail if you look closely. I'm going to actually do a little bit of a history check here too for everyone. There's a few things I wanted to look at. So here we see kind of a repetitious pattern here right before the fall of the bull market. Now, I made a video yesterday talking about why profits are being taken. Now, I want you guys to understand this. The market operators drive prices up and take profits during that. So every time you see a large distributional event in the run-up to the market cycle, that's profit taking. So for instance, both here and here are profit-taking moments for the market operators. What they're doing in this moment, though, is not taking all their profits. They're testing the bottom of the market and their ability to drive the price up or down. It goes both ways. So they'll test the market with supply, see how much of it gets absorbed, then run the market up based off very similar amounts of supply to test how many buyers and or sellers are in the market, and can they take the market higher without disrupting their, let's say, their flow. Here we're assuming already the market is going to go higher. It's going to go much higher, but be aware that every time you see one of these big, these are them. This is the big market operators taking profits into the hype part of the cycle as they drive up all of the prices. They drive up the price, they sell it off. They drive up the price, they sell it off. Now, this buying and selling is designed to both draw you into and scare you out of market positions, whether that's through liquidation or through fundamentally just not buying into or buying into the market hype too late through emotionality. So there's a few ways that this happens. But ultimately, one of the reasons why Wyckoff's method was so powerful is because it's looking at the supply and demand characteristics of an asset throughout time and taking into account the very real and important moments around what a spring is. So springs or events always where the fear is the highest. So if we go back in history here for Bitcoin and look at the moment when the fear was the highest in 2020, this was the peak first few days of the pandemic, first month of the pandemic. We can go back to this moment. This became effectively point 1, or the spring on our widening megaphone pattern leading out of a horizontal trading range and into a new bull market. Now, the rest of this cycle here, again, this is the market operator accumulating a massive amount of the asset, this giant supply signature, a huge amount of it. We didn't see the supply signature until the exact top later. And this is what they do. They basically buy the exact same and sell almost the exact same at both the bottom and the top of the market. It's like, here's another, basically a bottom market buy. So one of the things that's important is to understand that when we're looking at the emotionality of what's going on in the world based off an asset, it has to do with two things. What are people feeling in that moment? Here's peak fear pandemic moment. That drives up the asset price because they've accumulated a massive amount of it. They've taken everything they can off the open market. It goes through what usually appears to be 1 or 2 stages of reaccumulation ranges inside the trading range. We've gone over this multiple times. This is basically the best, safest places to enter your position and to ignore all this. This is all selling over here, basically. This is all distribution of the market maker or the market operators trying to get us to this moment of peak fear. Once they see that they've done that and they know that they have control of the asset via these reaccumulation ranges in the middle of the box, they draw the market price up. They sell into and take profits into this market cycle here already too before driving the price up massively. But trust me, these are profit-taking motions, not for retail, not for average individuals, but for the big market operators, because they've already accumulated an extraordinary amount of it down here at $6,000, because while you might be running out to buy toilet paper, they have an extra $2 to $3 billion to toss into things that they think are interesting. And that's usually what happens. Capital shifts hands. It goes from the impatient to the patient. So the patient to take their time here while you're out buying toilet paper. These guys accumulate extraordinary amounts of assets. They do it again. And each time they do it, to get the market price to go up higher, they actually have to buy less and less. So they draw the market price up by, just as an example, this is not true, just as an example, let's say I have to spend $10 million to get the market price to go up here, and I own the majority of it down here. And when I start selling here, all I'm trying to do is test to see what I can sell into based off the 10 million it took me to draw the price up. So maybe I can sell the $10 million and the price only goes down to here because there are consistent retail fish and buyers accumulating this asset. Now, this is a rough dynamic about how this works, but it's pretty close. That's not the exact analogy. But what Wyckoff is so unique at doing is going, hey, pretend that the market operator is not all these individual people, but is actually just one person. That all of the people equate to this one person, and this person is the market operator, or what Wyckoff consistently called the composite operator. I like to call him Comp Man. There's a few different ways to look at it, but we're all effectively a part of Mr. Comp Man here. We are the one kind of psychopathic entity or sociopathic entity that's buying assets while people are scared for their life and then starting to sell them when that fear starts to dissipate. So uniquely enough, I think this is quite a shining moment. This very top was also marked by the moments that you no longer had vaccine mandates. Those were removed from planes flying throughout Canada. You had the mask mandates were removed. This all happened at the very peak of greed. So the beginning of the pandemic started, peak fear, and the end of the market here was peak complacency, or well, not complacency, but just the lack of fear, I guess. Not even greed, just less fear in this one. People weren't scared anymore, and that seemed to be greedy enough. After people were not scared anymore, the market prices went down, and people began to get scared again. I remember this because down here in November of 2022, if we look at the S&P 500, you know what we're also going to find? September, October, November 2022, the very bottom of the S&P 500 bottom. So there's basically no way that this happens by accident. You don't get to the bottom of the market cycle for Bitcoin at the same time you basically get to the bottom of the market cycle for the S&P 500 unless you have the same composite operator, because they're not connected per se. Bitcoin is not the S&P 500, but the people that exist there are. It's all the same people. It's all the same people buying that create these market cycle bottoms and tops. So it's important to remember that when you're playing against massive interest, because it's literally everybody on the planet's emotional feelings based off the supply and demand characteristics of an asset. Now, I go through all this to say that it is right at the beginning of the bull market, like the bliss to euphoric stage of the bull market. The bull market started a long time ago. The bull markets start at 0.1, way down here at Bitcoin at $19,000. This is where the bull market started, because this is where the majority of Bitcoin was actually accumulated in those moments, was in peak fear, not in peak greed. Peak greed is when the majority of it starts to be sold off and the market operators have already massively increased their positions and are deciding to sell it off because they're like, great, we got what we wanted out of this asset. We're done here. I think a lot of people assume that the bull market starts when you're way up here. I don't know why. Maybe it's just because it takes people a long, like I think crypto capo finally shifted from bearish to bullish, but that was from the bottom of 0.1 up 400% ago. How late do you have to be to the market to think that it's not halfway over or like beginning into the stages of the reason they mark up the price and get us to 0.7, pretty much about where we're at now, just above the bar here in 0.7, just above that, like something like this. The reason they do that is so that they only have to spend a little bit more to hype up retail, get every retail person drawn in, and then sell into them significantly, right? Because Bitcoin went to the top, retraced 50% of that. So I just wanted to kind of make it understood that we've exited peak fear. Peak fear was a long time ago. Peak fear was Jim Cramer's stock market recession. Michael Burry's taking out $6 billion in fucking shorts against the stock market, like almost right near the bottom of the S&P 500. So that's peak fear. That's what that looks like. That's what it feels like. And it's usually when people are dying. So this is why the Wyckoff method can be so powerful. To simplify that kind of to where we are today, we are in a beautiful trading range right at the very top of that widening megaphone pattern. We have just hit the top of that trading range, also known as resistance, I guess, to some degree. There's a few different ways to look at it. Currently, I've just got drawn up in a very box format. If I brush over here a little bit further, it'll just give us the visible range of where we're currently sitting. most what I suspect is going to happen is that we're going to get another few buying opportunities. Is the last chance to dance with Bitcoin somewhere around $58,000. And then we're going to continue the market cycle up based off some of the data we had gone over previously around that widening megaphone pattern. So again, the reason why it's important to be paying attention to where profits are being taken is because, trust me, the big players, they're taking profits. That's the whole point of driving us into this price range to begin with. It's not to just sit on that for longer than they want to. It's not their style. So I'm going to redraw this here because I deleted it by accident. Again, I want you to take notice. The widening megaphone pattern on the left, the breakout that came out after, although this is where most people join the bull market because now everybody's starting to pay attention to Bitcoin, it started way back here on the day the WHO declared the pandemic on March 10th or whatever, 2020. And that's a big difference because that's where the majority of volume and supply signature took place. Again, you can see that by looking here. Massive supply signatures coming in and then diminishing some, and they only had to push the market up a little bit. And then even here in the supply signature, you can see they stopped accumulating massive amounts here, only needed to buy just a little bit more to massively mark up the price. You see your first really strong sell side signature come in, even less supply coming in to drop the price, which means the market makers are just waiting. They're letting retail do a lot of the heavy lifting. And then massive increases in distribution effectively, but all the way till we have even higher amounts. Although this is on Binance as well. So there, if we look at other data, you don't see quite as large of an increase in supply. In fact, if you look at Bitcoin here, I believe this is Coinbase. If you notice the supply signatures down at the bottom here, it's the March 2020 supply signature versus the spring of 2022. We had like 4 times more Bitcoin coming to the market on the pandemic than the FTX collapse. Yet, I'm sure the market actually felt more scared during the FTX collapse because it had more to do with the crypto market than Bitcoin itself. But yeah, don't underestimate the next step of growth that we have up, but also the thinness of the market, because what the market makers are doing is buying to sell all of it every time. That's the whole point of this market cycle. They've done it a few times before. I don't see any reasons why they wouldn't want to do the same thing again. Again, I do think we will get to an inflection point where people will come to the conclusion that all they want is Bitcoin and they don't want to trade it for US dollars anymore. But I don't know how long that takes. I don't know what type of lack of confidence or faith that takes in the market. I don't know if it's something we've seen yet either. So we're at a nice little point right here. I think we're gonna get a nice little trading range again between, just so I go over kind of the last sentiments for Bitcoin here. We got a nice trading range right at the top of that widening megaphone pattern that probably has us bump around between $74,000 to $58,000 probably before the halving. I would love to see a really flawless, fucking perfect accumulation range right here. So for example, let's take a look at Solana on a larger time frame. We've seen this more than once now, where what you get is if you've been studying the Wyckoff methodology, you'll see it right away. If you haven't been, it might take a little bit more, but this horizontal trading range here for Solana was basically perfect. This was textbook perfect horizontal trading range. And I think with the massive amount of interest that's in Bitcoin right now, I think that that's what we're going to get. And actually, it would be a really, really powerful sign is what we get is this is our primary shakeout. We get our automatic rally. We get our secondary test. We get maybe a month or two that even push us through the halving to confuse people. Like, wait, why is Bitcoin slower in the halving now? It's a weaker bull market, which it probably is by a little bit. And then you get a really sexy, perfect accumulation. And you get this one last chance to dance with a horizontal reaccumulation range somewhere between $68,000 to $70,000 before we just rip. But again, remember that price momentum upwards is where the large players are starting their distribution mechanism, and they do that through large scale buying. I know it's counterintuitive, but if you study Wyckoff's method deeply, this is exactly why it works so well. It's because you understand the intention of the market operator, not as just random individuals or what appear to be strong individuals like Michael Saylor who will hold forever versus everybody all at once participating in consciousness, which seems to be a really powerful motherfucking thing. So don't underestimate that. Let's see here. Just jumping into the chat for a second to make sure you guys aren't watching this live stream. Good, you're not watching it. Some of you are. Bad boys and girls. I told you not to watch this live stream. Shame on you. Is there benefits for traders joining the bear group, Tio? Can we gain knowledge beneficial? Well, first off, there's no risk for you. If you want to try out the Bear Den, you just pay for the month. And if you're not happy for some reason, so you didn't get the value out of it that you thought you might, we'll just give you a refund. It's a community of like-minded people who are sharing their thoughts and ideas and growing their own understanding of what this means as well. I'm not a priest to this religion of what trading ranges are. I'm just a student effectively as well. And although I have some experience that we can all draw on, actually what makes the group and community so powerful is that other people doing the same thing, looking at the same picture or the same kind of piece of chart art and going, oh, cool, look at this beautiful horizontal trading range. Notice the primary shakeouts, volume signature. Notice the backups, volume signature to kind of test that primary shakeout. We've actually even gone over this before. So you start to see these very repetitive patterns that are highly profitable, and we all see the same things, but you might be more interested in theta. Someone else might be more interested in SWI. SWI, for instance, I was just looking at, I think that's how you say it, SUI. Not exactly sure. I was checking out the chart we had drawn up for it last time, and look at this perfect, again, falling wedge straight through the bottom of the box, horizontal trading ranges right in the middle of the trading range, just like we saw with almost everything else before. Another horizontal trading range. Oh, this almost looks like Bitcoin in that 2018 cycle. 2 horizontal trading ranges after the spring of the shakeout, again, October 2022, all on the dot, because the market operator is one giant part of all of our consciousness. And then this massive markup in the asset day over day over day, to the point where you're up on here 400 to 500% from the spring. It's amazing. So this powerful mechanism might mean that you're interested in a different asset, but it shows up in all of them if it's a powerful asset, right? And I think that's what's most interesting about this, is that everybody can be looking at a different asset and learn something, and yet all collaborate together on the same thing they're learning. It's almost like learning music. Someone might be playing a different song than you. So yeah, the community has a lot of massive benefits that I do not just provide myself, that are provided by the community and to the people that have shown up year after year and continue to be paying members, because the value that they get back from it is kind of the community itself. And it takes a lot of effort to do. You'd be surprised how many times like fixing the website has taken tons of hours or thousands of dollars to pay someone to fix it or to upgrade all the Discord stuff. It just takes energy and time, and we're either paying people to do it or I'm doing it, which is even more expensive. So just something to think about. If you want to try it, you don't like it, we just give you a refund. But lots of people have gotten a lot of value out of it if you are there to do the work and be a part of the community, basically. Okay, I see Gainslord. That's a funny name. Gainslord says Adams /BTC looks wild on bullish divergence. So I want to go over this topic secondarily. I'm going to look at Atom versus USD, because I don't think looking at assets versus Bitcoin is the easiest, because the majority of leverage and assets are still in US dollars. Bitcoin is not the primary driver of markets around the world yet. Might be one day, still not yet today. I hope closer, but not today. So because of that, we're going to look at Atom versus the US dollar. And I think charts are much cleaner when we look at the US dollar charts. I think we just get a much better image of them. I don't compare them to Bitcoin, although it is nice to know, would it have been easier to just stay in Bitcoin, right? Because generally the reason why you'd want to play with a higher risk asset like Atom or like Fetch is because the return is going to massively outpace Bitcoin. So for here, I already don't like Atom. So if you've been in the group for a while, you'll know why. And the other thing you'll probably recognize is this 3 peaks in a doomed house. God, this is a get the fuck out of the market signal from now on. I thought it was just a bearish reversal. The bottom is the bearish reversal. The top is bearish as fuck. The bottom is the bearish reversal. So it usually marks the selling climax, the three peaks in a domed house. And we actually find this all over the place too. If we go back and look at Avalanche here on a much larger time frame, you also have the three peaks. 1, 2, 3. Again, not perfect. The footprint in the wild and the domed house, which is kind of often referred to as an inverse head and shoulders, depending on who you talk to. The Buddha, there's a few different ways that people have kind of recognized these patterns. So yeah, you'd recognize the three peaks in a domed house. You'll recognize a horizontal trading range here, but again, just the inability to break out of the top of the range here signals weakness to me. Signals weakness of ambition in the market to accumulate and drive this asset price up. It should already be at $24. If it's not yet, it's not really interesting. Again, we can go back and kind of do some backlogged work where we find out that that's incorrect, that I was wrong, or Cosmos is the coolest thing in the future, just people haven't figured it out yet. But often if the market isn't adopting it, it's because the market doesn't think it's the best. Doesn't always, beta cassettes records have the best sound, but that's not what the market adopted. So even though you're like, oh my God, people are so stupid, why wouldn't they just buy vinyl? Vinyl sound is so much better. I love listening to music. But you're failing to recognize that the audience generally doesn't care. They just want music they can fit in their pocket, which means not vinyl. Anyways, point of this, lack of ambition in the market. I would not be hyper interested in an asset like this. I'm actually generally more interested in assets that are already moving. Again, if you look at the price dynamic of Fetch over the last 48 hours, or SWE, the one we just looked at, following an asset that's already in massive growth seems so much smarter. Even just from since February, Fetch is up 5x within its trading range. In the last week, Fetch is up almost between 36 to 26%, which means that's almost the same amount of increase that Atom just had, Fetch had in this last week. And that's what you look for. You look for the market's validation of the price and the horizontal trading ranges that are taking place. Again, here you can see some of the very first work that brought us here, the accumulation, again, a distribution cycle, but more importantly, this accumulation cycle that took place for Fetch, the first major trading ranges, and then this massive breakout here that took place. That's what you're looking for. If it hasn't outpaced Bitcoin, which is, again, another great way to measure your growth, you'll be able to know right away, because you just go from November 22 to today, Fetch is up almost 50x. Did Bitcoin do that? Not even fucking close. Are you safer in Bitcoin on the long term? Yes. Was the risk higher in Fetch? Yes. So this is how you try to measure that game of understanding the accumulation and distribution cycles, and then the clarity of the reaccumulation's intention by the market composite operators to actually own that asset based off the way you see the accumulation. Again, here you had really strong accumulation portions of the of Fetch itself prior to this massive run up too. So there were, I guess, indications, but nonetheless, I went through all of that to say that Atom doesn't look that interesting to me. If you're already in there, it definitely looks like you're going to see a breakout of a horizontal trading range, but it still might not keep up with what Fetch does. Right, so even though Fetch is already up 50 fucking X, Fetch still might outpace Atom or Cosmos based off the current market's intention at the very least. Tio, can you look at Illuvium and Star Atlas? Yeah, I'm a big fan of Illuvium and Star Atlas, actually. We still have big VC bags from that, and well, sadly, FTX stole a bunch of our Star Atlas. Anyways. Okay, just as another kind of side example here as we go to Illuvium. Again, Illuvium from the bottom of its November cycle had a big run up, gave back all of those gains, and in a very short period of time continued up 258%, again, which is about 3 times higher than Atom that we were just looking at. There's a lot of volatility in here, but you could be witnessing a much bigger finishing of this trading range. I've seen these before where I'd call this basically a cup and handle, like the original style of cup and handle throughout the accumulation range. So I suspect that alluvium could go for a big run here in the future. The next thing I would do to kind of test that theory, generally speaking, is do something like go over to our favorite friends at CoinGecko, check out alluvium's liquid market supply, as well as coin lock. Well, I forget which coin. Damn it. I used to have a lock schedule or vesting schedules for tokens on here, but nonetheless, we'll just check alluvium to begin with. Circulating supply, 6 million tokens. Total supply, 9 million tokens. So there are approximately 3 million tokens still under vesting, which is a significant amount considering there's only 9 million in total. I suspect that could leave a lot of volatility in the market. Yeah, with a fully diluted market cap at 1.3 billion and at market cap now at 900 million, it could go higher, but not a ton, right? I think you'd kind of max out. Whereas, and actually, can we go market cap growth instead? What was the market cap of it then? Yeah, so we're in terms of market cap already. Tokens, we're at the previous market cap for alluvium, which is around $1 billion, which is kind of ridiculous, I guess. Considering this space is ridiculous. That's why we all like being here, is because we're probably all a little fucking ridiculous. Like, we like things that are similar to us. You're like, hey, wow, this is all ridiculous. I love it. So it's not a ton of room for growth here. I mean, even what's Fortnite's total FDV. I know Fortnite stats leaderboard. That's not what I want to know. Valuation. Maybe it'll just be faster to type that. Okay, so Fortnite is valued at 15 billion. So alluvium at 1 is alluvium really 1/15 of Fortnite at the moment? I don't think so. Probably not. But so it's difficult. Again, it's actually at a 900 million, 1.3 fully diluted. So there's not a ton of room for growth here. Whereas, for instance, there are some other games. You asked about Star Atlas. Let's see how Star Atlas is doing. We've got two. We've got the in-game token and the voting DAO. Okay, so this is more sensible, right? Star Atlas had a $122 million market cap, 287 fully diluted, which means, we're about half of the circulating supply at the moment is out. More will come later. But if we go to the market cap, take a look at the max. Again, we can see it was up at around 400 million, which wasn't too outrageous. It was a pretty damn good idea. So there's more room for growth in something like Star Atlas than there is in alluvium. And there's other places where this takes place too. Myria is another one that we've invested in, just as an example, in the video game sector, where it's 162 current circulating supply. The rest comes out through node distribution, so you get distributed tokens if you're running the nodes, similar to what Gala did. Fully diluted is only 495. So again, these are closer. You've got more room for upside here in terms of market cap valuation. Again, if we go here to Myria maxed, around 200 million has been the top, which is not bad for a little gaming company if they produce what they're actually supposed to, right? It's not a bad market valuation for something like this. I mean, we've made a few other investments in companies from the equity side of things that are kind of similar, and they end up, $50 to $100 million kind of out the gate in these early seed rounds, which is not totally unheard of in the traditional world either. So I would say this is closer to a fair valuation, whereas alluvium at 1.3 already seems really high. And although it could go higher due to hype, again, remember the market operators are trying to get out of their prices by drawing the price up as high as they can. So it could go higher, it will go higher, but how much higher and sustainably is another question. So if you've got big returns there, wouldn't be too much into it. Star Atlas, but when I say too much, I mean just like, I'll be more consistent about how exiting should look as that starts to happen. But again, it's just recognize that it is taking place. It's just called Atlas under crypto, isn't it? I see there's another Brent 2 cents dropped a question. I'll get to that one next. Okay, let's go Star Atlas to US dollar on Kraken. That should be fine. So here. Wow, beautiful. It's kind of Whoops. Okay, there we go. Yeah, pretty nice reaccumulation range here. Oh, that's on the weekly too. So we'll go to the daily. It should give us a little bit clearer. Wow, look how tight the bottom of this range was. This is pretty incredible. The very bottom of this range here for Star Atlas was only like 40%, which is 20 to 30%. This is very thin. The market was so thinned out for a little while, and then it just went nutso again, basically from the bottom of the market to today. 4 to 5x. It's not so bad. To return to all-time highs, I definitely could have sold a hell of a lot more of Star Atlas from our VC bags earlier on. But yeah, to get back to where we were is only a 5x. That's not totally insane in this market. But the valuation of Star Atlas is probably a little bit better than Illuvium. Miri's a little bit better. Try to look for lower market cap valuations with fully circulating supply at the end of the day. Oh, shit, I wasn't even showing that chart, was I? Okay. So Brent 2 cents drops a super chat. So if you guys put money in the chat, I'll answer those questions first because it actually makes them bigger and easier to read too. Otherwise, I gotta like a look at the screen over there. What are your thoughts on this cycle's top for Bitcoin, Ethereum? Please and thank you. I kind of went over that a lot in yesterday's video. I think that, here, I'll make a few more kind of conjecture pieces around the top. So yes, how I'm going to do, what's the easiest way to do this? Maybe I'll go to log here. Just one sec. I got to queue something up to give you my, maybe I can just do it with this one. This is the Bitcoin chart we've been drawing out for a few years now. The first thing we'll do is let's just for fun draw a Fibonacci retracement from the top to the bottom of where we are today. Let's go back in history and draw a Fibonacci chart for each of these from basically Pico top to Pico bottom, more or less. Okay, and let's go back and do that a few times just so we have some examples. Let's see if there's any consistency in this. Okay, so let's just do from 2013 onwards. So the 2013 Fibonacci of the entire trading range brought us way past a 4.236. So you would actually have to add basically a whole other trading range on here if you wanted to, or a whole other Fibonacci sequence on here if you wanted to get it to match up. But as time went on, Bitcoin could no longer reach that 4236 sentiment. So the first cycle from 2013 to 2017, we massively exceeded the 4236. This most previous cycle, we just made it under the 4236. I mean, I'm probably even missing some of it here. I bet you, let's see, if I zoom in and try to perfect the exact bottom of this here, if I get a slightly better number. Why is there no zero line? That's so strange. Oh, that's so weird. There should be a zero line here for this. It's as close as it's going to let me get it. I wonder why that line disappeared. Someone in the chat probably knows. Okay, yeah. So we even with perfect top and bottom wicks, we just made it under the 4236, and we're actually just returning to that now. So the previous market cycle was how much less is that too? That's not a small amount. So from the extension of the 4236 to the very top of the market is 300%. So the previous market cycle was 300% lower than the market cycle before that. So how many percent lower are we going to be today, and where would that land? That's kind of the question. So I don't think we make it to 423. I don't think we make it to the 4236 this time. I think we make it to the 2.618. I think we kind of peak out around $150,000 for Bitcoin. I don't know what other assets will look like at that point. There's always a conversation around, does it just go higher, and do we hit hyperinflation now? because that's effectively what we're witnessing is real-time hyperinflation. Not that Bitcoin does better in inflation, because that's kind of the wrong way to think about it. The way the government measures inflation is around consumer goods. That's not really what inflation is. The inflation is just the fucking increase of the M2. That's it. Basically nothing else. Ignore everything the Fed tries to tell you about what they think inflation is, because it's basically a lie. Anyways, so the point of this, I think somewhere between 150 to 180 is pretty reasonable. There's a buffer gap here. And then when the next cycle, I think actually takes us higher. I think the next cycle we exceed these cycles' percentage growth pattern, just because I don't see how we escape hyperinflation. Although there are some extraordinarily powerful deflationary events taking place right now, like excess death, AI. So there could be room for even more inflation without disrupting the underlying costs of many things. And I don't know what that does either. So that could allow hyperinflation to go longer, more stably. I'm not entirely sure. We're kind of in no man's land here for what a global reserve currency failure might look like and or feel like, and what that does to other assets in the wake of that taking place. But again, Bitcoin is the best poised for ending up at $6 million by 2030. So does it happen in the next 2 years? I don't think so. But I think it will happen by 2030, 2035, where you will see hyperinflation. And again, at the current moment, we just don't know how to measure in the deflationary events like excess mortality being 20% higher than it should be in so many countries. And with what AI can do to the cost of the production of things in the very near future too, I just don't think we can measure in the deflationary aspects and how much more capital in the markets you might need to really have an effect where you would get to that hyperinflationary catch point of total loss to trust and faith, where you're like, oh my God, if I have $100 today, if I don't spend it, it won't even be able to buy me the same amount of groceries tomorrow. And I think people are kind of seeing this, but hyperinflation is a really, really weird moment. And it has a lot to do with, again, the kind of fear of the general populace, like running out to buy toilet paper. If you get a hyperinflationary moment, like the toilet paper moment of 2020, Bitcoin can end up at $6 million in the course of 3 months. And it could be the next 3 months. I'm not sure. I don't know what the black swan catalyst could be. Or the potential black swan catalyst that Bitcoin goes to zero could be either. Although I don't think that's going to happen. We don't know. And that's the entire point of saying a black swan is like something could, but we don't know what would. So I'm just going to put a placeholder here of the unknown fucking things that go on in the universe. Okay. So hopefully that was helpful to the thoughts on the top. Oh, you asked for Ethereum too. God damn it. Ethereum is looking a little bit weaker. This looks like a reaccumulation after decline that we're seeing on its LPS range too here, which is not the strongest of breakout signals. I still think we'll see new all-time highs, but I don't know how much higher. I don't know what level of institutional interest is being driven here now. The ETF could potentially dramatically change that. But at the same point, Ethereum doesn't look as strong as it did in the last cycle. It just doesn't look like it has the same zest that it did leaving the trading range and breaking out. So one of the things I would like to see, and I think we're witnessing right now, is this LPS range taking place as a reaccumulation after decline. So for those of you that have been doing your homework, you'll know what these are already. Here's the reaccumulation after decline. We're in a horizontal accumulation range. I suspect very similar to what Ethereum was actually on the larger macro frame as well, where you saw distribution on the left, followed by reaccumulation. I suspect that's what's happening here. I think alongside Bitcoin's reaccumulation, you're going to see something that does this. It won't be as clean, I think, as the Bitcoin one, and it'll break up into new highs. But it's just at the fact that we're seeing a reaccumulation after decline here leads me to believe that we're not going to have exceptionally large growth out of Ethereum at the moment. The market could change its sentiment on that. So if we see pivots in that, could be something fun. But just as an example, for instance, Ethereum massively outpaced the 4236 last time by around 300%. So technically Ethereum from the bottom of the market was better than Bitcoin last time. Is it going to do that this time? It doesn't look like it based off the current trading range, but I could be wrong. It just doesn't look super strong here. That could just be excess liquidity. The fact that the previous market cycle's bottom was down at $200. There could be a ton more of liquidity that was being accumulated through here that made this a bit of a messier range. But, oh shit. There's the Ethereum screen. Thanks for letting me know. We can picture it. Yeah, the US dollar is a meme currency. It just, imagine the dollar having someone's, I like this. What do you say? Jacob Marta says, a paper rectangle with someone's picture on it having value is pretty much a pre-internet meme currency. Rug pulled and all. Yes, I 100% agree. That's a very great way of putting it. The Dogecoin is like Benjamin Franklin. Doge Dog is basically the new age Benjamin Franklin or something like this. Okay, so yeah, we're currently in an LPS for Ethereum. I suspect again that, okay, the previous market cycle's growth was significant. Here, we just don't see the strength in the reaccumulation at the moment. Although this is one of the more powerful reaccumulation patterns that we saw here for Ethereum, this rising gradient bottom. We've now fallen into a reaccumulation after decline. So that could be one of two things. Either the market is weaker or there's just excess liquidity in Ethereum being moved around from people who were buying it back at $200 in the previous market cycle in retail. And that could be what happens. So I could be wrong here that Ethereum doesn't outperform Bitcoin, but at the moment it doesn't look like it's going to. It looks like at best it will kind of track Bitcoin's price. The previous market cycle for Ethereum outpaced Bitcoin. And actually that might not be true. We might actually be keeping track with Bitcoin basically already. So from market cycle low for Ethereum to where we are today is 290%. Okay, yeah, so we're actually pretty close. Actually, we may have already exceeded it. Excuse me. I'm just making up nonsense. It sounds like, let's see. Market cycle bottom for Bitcoin. No, okay, 359%. Okay, yeah. So currently, if you're in Ethereum, you're 100% lower than Bitcoin. That's not great look for Ethereum right now. And again, based off this reaccumulation after decline, it just doesn't look like it has the strength in it. Or, where I could be mistaken, is that what you're witnessing here is just so much retail being kind of taken out during the market operator's price movement here that what you get is a little bit of jagged movement through the reaccumulation after decline, and then you get some ballistic blow up. But at this moment, Ethereum hasn't even kept pace with Bitcoin, whereas many of the other assets across the board have outpaced, right? So from bottom of the market, October, November, up 600 to 700% for Avalanche, 50x for Fetch, almost 15. Where are we at for Solana at the moment? Just as another kind of side set an example point. Bottom of the market to today, 18x. So it's clear that some assets are outperforming Bitcoin, but Ethereum at the moment is not still, and it just doesn't show the strength. So where that is in his the long-term price at the moment, it's a little bit hard to say. I want to see how this accumulation range turns out before I make more of a prediction on Ethereum's price point. But just let's, for an example, assume that it goes to 4.236. We're probably easily going to go to $7,000, and we could, if it is just market liquidity hiding, we could go higher. We could go as high as $12,000 to $18,000 for Ethereum. But I want to see how this trading range forms, because it's looking weak at the current moment, which is fair. Anyways, thanks for joining us today. I hope you guys had fun. I'm just sharing. I'm glad the live stream did eventually start working. I have a great time doing this with y'all. Remember to leave a like, a comment, share it around the internet. Helps YouTube not hate us. You're not sharing the chart. Okay, I did fix that, I believe. Thank you all for the support today. We'll see you guys again on the next episode. Here we go. Boom.